Good evening, everyone. Welcome to this session. Today, we are looking in decoding charts, and we'll focus more on how to look out for pullbacks. My name is Matthew, and I'm here with Edwin, looking to present this to you today. Edwin, how are you this evening?
I'm very well, Matthew, and I hope everybody is well today.
Okay, hoping so as well. So let's dive into our topic for today, trading pullbacks. Right to the first slide, we're having a description of pullback. It's where you have a moderate drop and rise, a drop or rise in price of a given financial instrument after a recent peak or trough has been hit. And that's within a continuation or a continuing uptrend, for instance, or a downtrend. Pullback is an idea that the short-term price movement is short-lived, right? And that the broader trend will resume once the correction is over. So the price must first break a key level, and then the first pullback following a breakout is what would present the opportunity. So when the price pulls back to retest the support or resistance, failure to breach that level would mark the beginning of an extended trend. That's what we want to look at today. So pullbacks can be some of the most rewarding signals for entries in the market, or for you to understand when there is when a trend or when a level has been broken completely. So this is an example of a pullback. There is a key level, key resistance area. So it's a pullback off a resistance zone. So that level has been holding as a resistance. As you can see, there are three strong touch points. And checking out there was a break of that resistance. And then there is a retest. So simply the pullback is more of a retest. So once you have the price pulling back towards that resistance zone, and then it's not able to break and again go back into the area of consolidation, which was holding previously, then it's a likelihood of a continuation of the price towards the side of the break. What would you say about that one, Edwin?
Yeah, so like in this case, this is not quite common, because the ones that are very common is a case where you have a price which is trending downwards or upwards. Mm-hmm. But in this case, as we shall see later on, it's a situation where price was sort of reversing. Initially, we had a downtrend, a very strong downtrend, and price would rise and drop, forming these resistance, as you have rightly put. So you have the first peak, the second peak, the third peak. Then on the fourth attempt, price fails to retain this zone as a resistance zone. It breaks, and on the far right side, you can see that upon breaking that resistance, price reverses a bit and continues moving higher. So basically in this case, I would say it's sort of a case where price would be on a reversal from the previous trend. But mostly, from what I've seen, the best setups, or in a case where you'd have an uptrending market or a downtrending market, that's where you're likely to get quite a number of setups along that trend. So it's a way through which market would form a continuation of the prevailing trend.
Yeah, nice one. So I think you've tried to bring up the point of a confluence where we have several other indicators supporting the same direction. I think we're going to look at it next. So in a nutshell, this is where someone is trading a breakout, and it's very tricky because most of the times is when traders get fake outs. You find a break of a trend, and then after some time, then it just gets back again to the zone. So the pullback of a resistance zone that has already been broken is a good indication for someone to use to prove that you have a clear break of that resistance level. And if you're looking for confluence, in this example, we have a moving average, and you can see the price is resting above the moving average. For the case, you wanted to add something?
Yeah. Just before we move on, another common mistake in trading pullbacks is that, like in this case, we have a very clear resistance. So what tends to happen, there's some traders who enter into a trade very early at the break of a key zone. In our case here, we have resistance. So like in this case, you might have traders entering at the earliest opportunity of price breaking that level, which is resistance. So a failure to wait for the pullback would then mean that a trade which could have otherwise given you, let's say 100 pips, you might end up getting fewer pips because the timing was a bit off for you. So waiting for pullback is one of the surest ways of maximizing on such opportunities when they occur.
That's for sure. So let's look next on the trend, and this one is giving us even more confluence. We have a downtrend based on that trend line, which has been holding on like 1, 2, 3, 4 times, and then we have a moving average still showing the downtrend, and still we have that support which turned into resistance, and the price has really pulled back off that support zone like 2 times, and all of them, they have given 2 very good entries. Yeah. So currently we're looking into a point where the price got resistance again on the same or is bouncing off on the same support which was holding previously, and still it's falling below a moving average and getting resistance on a downtrend. So that's a very strong confluence. So we will see in the next slide they explain where we're mentioning also the other tool that you can use to find the confluence, like the Fibonacci. If you had used it here, probably that could have been around 50, if not 38.2.
Yeah, then the additional confluence would be the fact that we have a trend line. We have 100 period simple moving average. Then the fact that that is happening along an area where we had
the previous support,
a dip, a previous support, then all those confluences would increase your probability.
This approach of looking at the market also is in line with market structure.
Yes,
the market structure, where if a previous low of the market has been broken, check out for the continuation. If an attempt to break or to return back to that zone does not lead to the price getting again getting back to the zone. I don't know whether it's clear that they have explained. Like if you have the price, if this is the previous low, the price went lower or broke that low, on an attempt to go back to that area again, it doesn't succeed to break it, right?
Yes.
So it just maintains that level as a new, if it was a support, it maintains it as a new resistance.
Yes.
And for the previous case that we're looking at, if it's a resistance, the price breaks, goes back, and it turns the previous resistance into a support. So this is what we're talking about, the price pulling off that resistance zone, which was there previously.
And failing to go beyond that level.
Exactly. And the other one is where you have the support, the price is pulling off that support zone, which was held previously. All these concepts they revolve around, and it's just a matter of giving it a different view. Yeah.
Yeah.
Before you give us the examples on the charts, Edwin, we can just have a simple explainer here where we just have to note that the context with which price pulls back would occur along support and resistance levels. So for you to apply this approach in analyzing the markets and getting entries, you need to get well versed with identifying support levels and resistance levels in the market. And if it's a strong one, then the better. Okay, so having support or resistance available will give you an idea where there is strong demand, especially at the support level, or where there's strong supply, especially at the resistance area. So when those areas have been surpassed, then it means that the demand is no longer sustained, or supply is no longer sustained at that level. So if, for instance, the market is an uptrend, then it's ideal that the support is tested. And when we have a small retracement, then it's likely to resume again. In a downtrend, the resistance becomes the level where you want to see price pulling back to. And at that level, then you have the price resuming again lower. So furthermore, into the facts that you want to look at is the areas where you're looking for those the test of those areas. Yeah, it is where you're likely to see other indications that are going to give you confluence in the market. When we talk about confluence, it's where you have another indication, another indicator, another tool which you're using in analyzing the market, confirming the same direction that you're looking into. Like, for instance, you have got horizontal levels, trend lines, slopes, Fibonacci, moving averages, among others. They are supporting the same idea that you're seeing in the market. Yeah.
Yeah. So it's sort of like a convergence of several indications, exactly, almost at the same time. Yeah.
Yeah, it's a confluence. So you have so many indicators pointing you towards the same idea, trading idea, and they all agree. Something else very important is candlesticks. The candlestick patterns around those zones can help you get, or can help support your idea even more. Okay. And examples of these are bullish hammers, bearish shooting stars, bullish engulfing candles. We have not included them here, okay, because we've looked at them previously in other sessions. So we believe it's something that you've have an idea of. But once you find these types of candlesticks, bearish engulfing candles, they can make they can give you more confidence, or add into just give you more convincing convincing case, right?
Yeah.
To once your trading idea. So the point is, trader needs to apply some form of price action analysis in connection or in conjunction with the support and resistance levels that you've identified. So Edwin, you can take us to the charts, and let's look at the examples that we have.
All right.
Yeah, so share your screen once you're ready.
Okay.
All right.
Tell me when you can see the...
Yeah, it's now visible.
Platform. Yeah.
Can see it.
Yeah, so we have a few examples which have panned out in the recent. So we say that the basis of trading these pullbacks is to have a scenario where you have support or resistance. So that could be either along static support or resistance, a horizontal support or resistance, or along a downtrending market. In some cases, you will notice that there are cases where you'd have both support static support along a horizontal zone, then you might have a trend line, or in a case where you've added moving averages, then that would support, or it would enable you to know whether price is trending to the downside or to the upside. So this is EURCHF. If you look at this pairs structure, you'll notice that it's at this point where this downtrend began upon breaking these lows. So here we had an area of support, and once it was broken, we would have price pulling towards that area, which was serving as an area of support. And upon retesting that previous support, price would initiate a continuous flow to the downside. So this was the first setup which you could take on this pair. Fast forward, you will notice that at this point, so I think this was last week, and Matthew, I think we had shared this. I don't know whether you are able to take advantage of this pullback. So again, here we have a previous low. Price rises, retests the trend line, drops again. And if you look at this zone, if I could try to minimize the chart, you'll notice that it had served as a very strong area of support long term. So this is the area. So it began at that point, retested again, pulled upwards, retested for the third time, rose again, and here we are. So the price rose, hovered along that support before breaking it. And once it broke it, it retested. So this is where the retest happened. Then upon failure to go beyond that zone, so not only did you have an area of support, but you also had a resistance basing it on this trend line. So failure to break that support, then that could support your argument to consider a sell position. So this is a trade which I took. So the entry was at 1.3355, and I was able to exit at 1.3288. And as you can see, that downward push was quite strong. So up to that point, you could bag something close to 230 pips on that setup.
Those were quite some pips, yeah?
Yeah. Then there's Euro, Swiss franc. Again, it's been on a strong downward move, and based on the structure, we could be able to connect several lower highs through a trend line. So it's at this point that this pair would form a lower low, then price would pull towards the trend line. Then there was a massive drop, which culminated into a break of the previous lower low. Then price would drop further and rise back to retest the same area, which was sort of serving as an area of support based on this lower low, previous lower low. Then afterwards, after retesting and failure to break both support and the trend line, which was serving as resistance, so that confluence would give you a high potent continuation. So today, between today and Friday, this pair has dropped by close to 84 pips up to now. So again, that was another setup which you could have easily traded between Friday and today. Then we have pound yen. So pound yen has been on a downward move since this peak. So it dropped, and along this zone, it was serving as an area of support based on these two previous lows. Then it's at this point that we would have price breaking aggressively. Then here we would have a pullback. And when the price rose, it would come to retest the same zone where we had these two previous lows before further continuing to the downside based on the prevailing trend. So as you can see here, price made an aggressive downward move. So when price was unable to penetrate this zone, which was now serving as resistance, you can see that there was a massive downward move by close to 450 pips. So it was a very massive move. Again, that was another setup within the course of last week. Then if you look at Aussie against dollar,
Edwin,
yes.
before you go, if you go back to the same currency pair that you're looking at, I mean, that zone, because we're not talking about a specific level, that zone is still holding strongly, because look at the current price level. It's like it's testing that zone again, and it's pulling off.
Oh yeah.
Yeah, it's
Yeah,
just
it's
around
not
the
far
same
off.
zone.
Yeah, it's not far off. Yeah, actually.
Not far off, just around
Yeah.
same level, and it's getting a resistance of that downtrend. So
yeah,
it's an opportunity actually. If traders can see whether they can you can check out whether it's something viable for you and look for positions possibly.
Yeah,
but we're not calling out a trade, but
yeah,
I mean, check out.
Yeah. Which brings me to the next one. So this is Aussie dollar. It's on a continuous downtrend. It's at this point where we would have several lows. So this is sort of like a double bottom, Matthew, right?
Actually, triple
bottom. Then it rises towards the resistance, which is provided by this trend line of ours. So it's today. I was closely following it, and this breakout happened earlier today. It was in the afternoon. So we are yet to see whether there would be a retest, a pullback, to then know whether if a price would continue. If it's to happen that there would be no price would fail to go beyond this zone. So the thing is, if price rises towards this area of support and have price failing to go beyond that point to then retest this trend line, then there's a possibility that continuation to the downside might persist. Then lastly, we have...
Before you go, Edwin, I still... Sorry for this distraction.
No.
But you see, right where you have your crosshair.
Yes.
That one serves as a very good example as well for the pull, for the
this one,
price pulling off. Yeah, from the previous support turning to resistance. Just exactly, that's what I was pointing you to. And so if you just go back a little bit, and you can extend that zone. Perfect. Thank you. Perfect.
Yeah.
Exactly.
Yeah, I mean, what you see might be totally different from what I'm in a position to see. So yeah. Again, this is
what matters is they are all correct.
Yeah, they are correct. And yeah, you could have gotten an opportunity to sell.
It's two
then
very good entries.
Again, it would rise again, retest, fail, and yeah. So here there were two opportunities actually, Matthew.
Yeah.
So there was this particular one. Then we have this one here. It's close to 80 pips on both. So yeah, so those are beautiful examples. Then finally, we have Canadian dollar against Swiss franc. So this is the one that I was talking about earlier, Matthew. So for most of the ones that we've looked at, these are cases where price would be on a downward trend. Unfortunately, we were not in a position to spot any setup on a rising market. So this particular one is quite unique. You remember this move when Swiss National Bank raised its rate by, I think, 750 basis points?
Yeah.
There was this massive drop in CAD Swiss franc. So Swiss franc really strengthened against its crosses. And from that point onwards, the price has been struggling to rise above this level, which has sort of served as an area of support. I mean, an area of resistance. Yeah, so if you are closely following on this pair, it would have provided a similar opportunity for a pullback. So in this case, we have the first peak, price drops, forms the second peak, struggles, rises again, forms the third peak. Then I think towards the end of last week, this must have been on Thursday, the price broke that resistance. We had a retest before a further continuation to the upside. So as it appears, this pair might be on its early stages of an uptrend. So this setup could have generated around 64 pips upon that pullback.
That's a great one, Edwin. And I think that upward move is likely to be sustained. Looking at the moving averages, just go back to the same time frame that you are in. Yeah, yes. Look at how the fast moving average is providing support for the further upside. You see?
Yes.
It's not actually touching the midterm moving average you have, the blue one.
Yes.
So those are indications of further continuation. So on the break of the upper resistance level, then it's likelihood of a further upside. Yeah.
Yes.
Yeah, exactly.
Yeah. So based on whether it will sustain this momentum above these moving averages, then you'd be in a position to know whether that upward momentum will be sustained in the days to come.
Sure. So yeah. That was the last example, right?
Yeah. So yeah, that's pretty much it.
So I think what traders should note here is if you can just identify key levels in the market, just mark out the support and resistance, and just wait to see how the price behaves around that area. Now, when there's a breakout, just be watchful to see that that level has really held in terms of if it's a break, then make sure that the price doesn't go back again into that zone if it's a resistance or support, and you're likely to find some very good trades. So check out for confluences with moving averages. Like in this case, what you're looking at on the chart is where we have the moving averages showing an uptrend, and actually the price is holding above the fastest one, not even touching the medium term. And the long-term moving average you have there is not even being touched. They are really fanned out. Other things you want to look at, we've mentioned them. There might be Fibonacci retracements, could be 38.2 or 50. Yeah.
Yeah, and if I remember, I think we covered the same with you, Matthew. Yeah.
Yeah, we covered that
regarding Fibonacci. So yeah, so you could as well use Fibonacci for the same.
Yeah. So this very simple concept, you don't need something complicated to trade well in the market. You just need to take some time and focus a little bit. take a little bit of time to look out for these key areas. Once you see a break, don't be so fast to get in. Just wait for some confirmation, and you might have some very clear setups that you can ride for at least some profitable moves in the market. So up to that point, I think on my end, I don't have much. Just thank you, traders who have attended this session, and happy to be with you. And there's someone who always comes to post things which are not appropriate. Please, it's not good. And apologies to our viewers who are in this session. Just ignore them. We're going to remove.
All right.
So then up to that point, we invite you for our sessions, other sessions which are coming up. And by the way, if you want to learn how to analyze the market and draw these setups and look at them, you want to learn them one-on-one, just visit us at our offices. You'll find Edwin at Nairobi, Delta Corner Towers. Yeah.
Yes.
Yeah. And for me, you'll find me in Nakuru. Okay. Tower 1. We have our other fellow trainers. At Eldoret, you'll find Samson. At Thika, you'll find Robert. In Kitengela, you'll find our colleague Kevin. And we're here to share this information with you all along. So to find more information on a lot of things that we're doing in terms of this education, follow us on our socials. Okay. On Twitter, we host Twitter Spaces, right? On Instagram, on Facebook, and for those who would want to chat me on or follow me, sometimes I post a lot on the Instagram as well. My handle is Matthew_Kabere. Okay, and on Instagram, still Matthew_Kabere. Let's keep engaging on these markets. Edwin, what's your handles?
They can follow me on Twitter at Eddygituko, EDDYGITUKU. Yes, so you can interact there.
Okay, thank you so much, ladies and gentlemen, traders, and see you next time. Bye.
All right, bye.